today. That's one of the main things I'll be covering today. 1 second, let me just go ahead and stop this. So where's the rest of the gang at? Okay, well, we just gonna get started anyway, man, because you know, everybody got things to do today, and we have a lot to cover. Everybody have a good weekend.
Yeah, bro.
Good,
It's all right.
good.
Been busy studying.
Good afternoon, y'all.
That's good.
No.
Yeah, man. So, like I was saying earlier, this is going to be a interesting week. We got a lot of not just economic events and stuff that's coming up, but we also have a lot of amazing chart setup, especially after what happened last week. So let's go. All right. So first and foremost, man, again, thanks everybody for being here and for taking the time to join this meeting. So we're just going to hop right into things. Yeah, I'm going to skip a few of these slides right now, and we're just going to hop right into what happened last week. But yes, we're going to start with our market overview. And so just a quick look at how we ended. So just real quick. So this is Friday. This is the previous Friday. So let's say not last Friday, Friday the 15th. So this is Friday the 15th, how we finished. And this is how we finished last Friday, which is the 22nd. And a lot of times we get almost an inverse of what happened previously. And that's kind of what happened here. If you look, not really, but almost. If you look with the exception of a few, you see 2 Fridays ago, we had tech down here at the bottom with energy at the bottom. And then we had communication services and materials, right? All of them were flipped to the top. That's how they finished this Friday, right? And if you look how real estate was one of the least bearish sector last week, it was one of the reddest sectors this week. So, well, this last week, just pointing that out, right? Because a lot of times we get that inverse, and I know it kind of helps out sometimes with looking at how things play out. But yeah, let's get into some actual things. So pretty much the last week, the US stock market wiped out close to 1 trillion in value as a hawkish pile sparked a mini crash. Now, that's a mini crash, but man, wait till we just talk about exactly what's going on. So these just some key highlights that I kind of want to cover. There's a lot more that happened, but I had to decide what was really worth covering because we have a lot more things to cover. NVIDIA is at risk of falling below its earnings gap trend line, and I have that charted also for us to look at. It's a really interesting chart. And the Federal Reserve, we had skipped rate hikes and we kept the Fed fund rate at 5.5%. 1 second. Now let me get into this because I want to kind of go over what happened with Powell a little deeper because it kind of really sent the market going. It was just a lot going on during that press conference that was interesting. And so just instant market reaction. We had the US dollar rally, bond yield spike, and stocks drop. The key takeaways were, and Powell's statement were pretty much, as we discussed, it was a very hawkish statement, but we already knew that they were going to be hawkish. I guess a lot of the things that really got people, because remember, if we go back to the last quarterly meeting that they had, they actually the rate hikes, and they kind of like cut it by, it was, I guess it was hawkish, but not as hawkish as it was back in June. Let's put it like that, right? But during the press conference, a lot of things got unpacked and the market started to fall off a cliff. And one of the things that was said that rate hikes for November was still on the table, because if you look, the market was rallying for a while. Everybody was like, well, Powell's done for the year, man. They just bluffing. We're not going to get any more rate hikes and stuff like that. So we did get a hawkish pause. So we didn't get any rate hikes during this particular FOMC meeting or Fed decision, but it's not over. It's not over. It's a lot to come. So yeah. But yeah, it was just a lot going on during that press conference, and normally Powell dance around the same questions, and he did that. But this meeting, again, it was more sensitive to the rest of the year, I guess. And then a lot of people and a lot of the Fed members and talking heads at CNBC, everywhere else there, everybody's already looking at what the Fed is planning to do for 2024. So yeah, a lot to cover about that. I'm not going to really go into detail about everything, but again, we had because we kind of talked about it on Wednesday in real time, so I'm not going to really go too deep into everything, but that was one of the main reasons the market fell off a cliff. So I got a few chart setups. I'm going to start with SPY. All right, so man, I got this broadening formation on daily chart for SPY, right? And so just pay attention to how this played out. So we've been in this little range here, and it's funny how this chart is setting up now, but one second, hold on. Just left my level offer here for a second. So yeah, we had this. So SPY was holding on. It was holding on for a while, and it looked like we were going to possibly bounce here on Thursday, going into Friday, possibly, so we did get a little, we opened here, right? And had a pump fake. Then came crashing down towards the end of the day. Well, I'll just say like halfway through the day, we came crashing down. But we lost this trend. We lost the structure on the daily, and we lost it. I'll show it. It's depicted better or easier on the weekly, but just take a look at this, man. So we lost this structure. So we're headed towards 428. That's our next price target on SPY. Now, again, there's a possibility we gap down, but there's also a possibility we get a little small retest first, but then continuation. But SPY wants that 200 EMA. Looks like that's where it's headed, but we got to get we get to this this 428 first. Where did we close on Friday? We closed at 430.42, but we took out 430 on Friday. So the low a day for SPY was 429.99. So we took out that low, and we lost the structure. We closed below the low of the structure also. But yeah, so the next price target we got is 428.28, and then from there we have the 200 EMA. Now the thing about the 200 EMA, there's right below it is a bullish gap. Bearish gap fill, and it looked like that's what we'll be going for. We'll be going for that gap down to 421. Now I have support for SPY at 417. That's my next support for SPY at 417. But again, we got these other levels intact. So yeah, we may get a few moves or pumps for SPY in the other direction, but I just it's a free fall down to 417 in my opinion. So I like when the market gets like this. And now another thing, this is just a fun fact. I like to throw out these fun facts every now and then. So for the last few third weeks of September or final weeks of September, the market fell off a cliff. Well, had a continuation to the downside, let's say that. So and I'll get to the weekly in a second, but yeah, so I'm expecting for SPY to have a continuation down even further, just to follow that trend. I actually shared a post last year showing we traded that same dip or this particular setup last time also. But hold on, I'm gonna actually use SPY. I'm gonna turn it to the weekly, but just do it like this, probably better. Yeah, so here we go. Oof, It's ugly move, man. I mean, it's crazy, but remember, we were consolidating for a while, and it had to break out. And technically, for a while, we were still holding up, but we lost that, and now we have a ways down to go. So, like I said, we have a few levels, but this is where look like we're headed, man. And so it's just not pretty. It's not pretty. It's not a pretty chart. And yeah, let's just see if SPY gets saved anytime soon. Now, remember, we're going into earnings season. Earnings season starts in a few weeks, and but we got a few more earnings coming up before that. But yeah, we got earnings season coming up really soon. But yeah, this is a ugly situation. Now, 1 second, let me go over to the monthly. Also, get this off of here. Wow, this doesn't matter. Well, I'll get that later. But yeah, man. So this is crazy, man. This is a really crazy chart, man. And it all plays out. It's all lining up perfectly for for what's to possibly come. So we'll see how it plays out again. It's not going to be a straight line down. It's not going to be a straight line down, but it's just something to look at, man. We got full time frame continuity. We got full confluence in this situation. So I just want to take a look at the quarterly just quickly. Yeah, so just an ugly market, man. Everything is just looking a little crazy. But just remember, man, again, the markets don't just go straight up. They don't go straight down. So we're going to get a lot of pulses in this. But just remember the prize, man. Look at this. Look at the volume also. This is the highest volume that we've had in a while, man, since let's see, this is the highest volume on the week that we've had since June. That was the last quarterly meeting that we had. So this was the highest volume that we've had since June that we got on Friday. Well, sorry, for this last week, and it was bearish. So yeah, just looking for a continuation. That's all I'm saying. So regardless of what happens and what you see, and it's a lot of, I got a few stocks that we need to cover, kind of head into this. Another one was Nvidia, man. Let's start here. Man, this is another one that looks crazy. But look at this. I mean, it's crazy, but it looks good in a lot of ways. Here's our broadening formation on Nvidia, right? And this is our earnings gap right here that we have. This is our earnings gap, a huge gap, right? And we've been holding this for a while, right? Been holding this gap since May. And then we have this trend here also, and look like we're headed towards the bottom of this. Now we lose this area right here. We're going to free fall down to like 395 or something like that. So just it's a free fall, man. But again, just paying attention to what's going on, because look, a lot of volume came in on Friday to try to defend this area here. So they're trying to defend it. Now, also another thing to pay attention to is each time that we've had these bounces here, I mean, each time we've touched this area, and again, it's not a trend that's been holding up for too long, but since May is a pretty decent amount of time, right? But look, so every time we touched it, we bounced off of it. So now we're hitting here again, but now we got the market falling off a cliff. So like I said, if we lose this level, man, I'm not even worried about this gap here, man. If we lose this level, I think we go down to 385, so that's going to be a nice trade idea to keep an eye on also. So this is just something I'm looking for, bigger moves, man. I'm not looking for the smaller moves. Now, again, we got earnings season coming up, so a lot can happen between now and then. So this is another one to keep on watch. Now I'm going to show you the weekly on this also. It clears everything up a lot, right? Makes everything look a lot clearer when you look at the weekly. First time we touched it, we bounced off this area. But yeah, man, it's just ugly, crazy move here. And we've been playing in this range though, but so we'll see exactly how it plays out, if they defend it or not. Because again, you have to look at now I'm not going to go into that with Nvidia, man. I just feel like if we lose 400, we got a nice move down to make. Let's put it like that, man. We got a nice trade setting up if we lose that level, man. Nice broadening formation though. And let me go over to Apple before I hit Meta. So all right, here's Apple, man. So here's our daily on Apple. Interesting Friday on that one as well, right? It was a good trade on Friday as well. So look, we had, again, they try to defend this area. They're trying to defend this area because obviously Apple is a very important, the biggest stock on the planet, on the stock market. And so it's very pivotal in what happens to this market. So they can't let Apple die yet. Apple has a long way down if it falls. So look at this. Look at this, man. So this is a bull flag, beautiful bull flag on the weekly. And it's been bouncing off this area for a while also. But so like I said, we don't see if it's been holding this uptrend, this support for a while, man. So Apple still has a lot of a this is an ugly chart, but it looks good if you just looking at it as a bull flag and if the market wasn't in turmoil as a whole, right? I think Apple holds up, but again, if it doesn't, because we got an inverse hammer on the weekly, we got an inverse hammer on the daily, and then here's how the monthly looks just quickly before I go back to that. So we got, this is a 222. Damn, so it's inside on the monthly, still inside on the month for now, and still could stay inside on the month. Just Apple just needs to hold that 172. It lose 172, and we are out of here, man. It's just that it's 172 is a very important level to stop Apple from going all the way back down to 165. So again, that's a move that I would love to play. So as well. But yeah, so again, that's a lot of stocks that are holding on by a thread. Let me go to Netflix, man. This was an interesting one because that's going to be one of the first of many that has. I'm typing Tesla while I'm typing Netflix because I'm thinking about Tesla. That was a great trade on Friday. Yeah, here it is right here. So look, man, this is an interesting situation with Netflix. So and this is what you got to pay attention to. I was focusing on this in real time when the market was seeing extreme pressure on Friday. We had they were trying to pull Netflix into this out because it closed the gap. So we came down here to this gap. And this is this is a key level area as well. I wanted to show you on a weekly because it's easier to see on the weekly. Netflix must hold this level or we have a crazy free fall down to at least 360. This is an interesting area right here for Netflix. And again, that they have earnings coming up in a few weeks also. So if it loses this level, that's a great trade down, but a lot of pressure came in, but they were defending this on Friday. Now, obviously we had some bearish news the week before about the CFO said that the ad revenue wasn't really gonna have a serious impact on their customers right now. So it kind of caused the stock to flush because when they bring out key information like that very early ahead of earnings, it's like it gives you just some indications. You just got to kind of pay attention to it. So they kind of setting their shareholders up for some things. And then also the analysts re-rate those stocks too. So, I mean, there's a few things that could happen with that. I really try to stay away from Netflix heading into earnings unless I see that the move baked into the earnings is a relatively low one that seems attainable. Otherwise, you get an IV crush playing that. So I like the move before heading into it or either playing it after earnings. But yeah, but it has to hold this level here. So this is a stock that's on watch. It's one of the ones that I'm keeping a huge eye on because again, if it loses this level here, it plummets, man. So we definitely need to watch Netflix and this key area right there. So again, they defended it. They came in and saved it where other stocks flushed and died on Friday. And we're going to get to some of them also. But yeah, it held up pretty well. Now, look, here's the daily. I mean, because again, it was just an ugly situation. And hold on, before I do that, yeah, so you can see it clear on the daily. Just had a nice move down. So just a 222 continuation on the daily and just it's moving down. Just want to see where my I want to see where the 200 is on here. Give me a second. Where the 200 is. Yeah. Okay, cool. So we got, all right. Oh, interesting. Okay, so that's where the 200 is. So that's the, so look, so the 200 EMA, right? Well, most people use just the regular moving average, but the 200, it's a long-term trend on the stock. So I just and I didn't check this before we got on here. I didn't check it at all. Just something that came up in real time because I'm like, it held this area pretty strongly and it's a key level, but I just wanted to see how far it was away from its 200 EMA because again, that's where that's a strong uptrend. That's where stocks get bought up on. One second, let me just show you on the daily in a better way so you can see stocks normally get saved unless something bad happens. Now this is our EMA. I want to show you, I want to bring up our, I want to just bring up another one. Hold on one second. Actually, which chart was I using where I had it on there? Was it NVIDIA or is it SPY? Yeah, it was this one. So I'm just going to use this chart since I already got it set up. I gotta make no adjustments. Yeah, okay. So we got this EMA. So all right, so we already lost our 200 moving average. And so this is our EMA right here. I like to use the EMAs. And so we're right here at this 200 EMA, man. So let's see what price does here. I mean, that's still a nice move down. That's a 10 move, a $9 or $10 move down if it loses this level. But like I said, if it loses this level, forget this move down. If we lose this level right here, we lost the structure. The market structure breaks down. And then, like I said, we can take a huge move down. That's a big move down. So I'm looking for that. If that happens, man, that's going to be another stock that I'm looking to attack. All right, cool. I was looking at the weekly, my bad, instead of the daily. All right, so it didn't lose its 200 moving average. I was looking at the weekly, not the daily. But yeah, so we right here at our EMA, but this is the moving average, just the regular simple moving average versus the EMA. I used the EMA, but look, I wanted to show y'all this because look, so typically this is where if you're a long-term shareholder on Netflix or just a long-term investor, this is where they, we talk about patience and having discipline in the stock market. This is where we come in and where we typically buy, where they come in and buy those things, man. So, and that's just a very, so when we talk about patience and you ever hear people say, well, oh, that stock too expensive, or I'll buy it when it hit a certain price or a certain place. So this is, you got different EMAs for different things. And now, but the 200, again, the 200 is where people come in, long-term investors come in and buy it up. So those are the big dip. It's where they really come in and buy them up. Now, obviously, there was a time when Netflix was just dying and dead because it was a lot going on with Netflix, Meta, and all of them back in 2022 when they were making $100 drops down. So that was when they were below those moving averages or whatever. But now when we got back above them, they became strong support. So when you see a stock near a support like that, that's a strong support, man. I'm looking at Netflix. I'm always seeing charts, seeing patterns and stuff on charts. So I'm looking at this. When I zoomed out, I start seeing other things, man, and just looking at different things that I'm seeing on this chart now. So let's see, man. So that could end up being a bull flag, man. If it bounces right here, because again, we got a gap fill area right here. We got the 200 EMA right here. So we got a lot of things that kind of show, or a lot of important areas right here, indicators, I should say, where this would kind of be a support area where stock would kind of bounce and this bull flag could play out, or it could, just come back up here, retest the top of it and just stay in this trend, in this channel, because this happens a lot too. But I just like the fact that we got a gap right here. And again, this is a gap that I got on a weekly, so you can't really see it depicted on the daily like that. But 1 second. I'm gonna go back to the weekly, but man, this is the way this setup looks here, right? If the stock holds, then that's great, man. But if it doesn't, crazy. But 1 second, let me just go back over here. Yeah, so this was yeah, there it is. Okay, so we got that area. Yeah, so this was the gap on the weekly right here, right? And we filled it on Friday. So let's see if it holds here. Again, keep this on watch because again, we're at a lot of I just want to see what the quarterly looks like. All right, this is the quarterly. Okay, so we're still 2 up on the quarterly. It's just not in force, But this is crazy when you have a stock that goes up this much, man. But look how much we had dropped already. This is a quarterly, so each candle represents 3 months of price action. Interesting chart when you zoom out and take a look. But yeah, man, this weekly and the weekly looks great. And yeah, I'm just looking to see exactly how this plays out, man, because like I said, if it loses it, man, we got a nice move down. So either way, it's something to keep an eye on. And I saw a lot of flow going in there on Friday. So, again, a lot of times markets flush out like this. We can either get a continuation. I think we possibly get a pump fake first, man. Wait till y'all here. But we got a lot of stuff coming up this week. I got a few more charts I want to hit, but I got to get into some of the stuff that's coming up this week, man. We got some important stuff coming up. Another stock that was holding on for dear life at a key level was Amazon on Friday. And I pointed this out to the team, just something to watch. We got our first, and this is on a weekly, we got our first red oscillator bar on Amazon since when? Since November of 2022. This could be the first week that closed with a red oscillator bar on Amazon. And then we got MACD crossing below the signal line. We got the MACD line crossing below the signal line. Let me make this a little larger so you can see it. So right here, we got the MACD line crossing below the signal line, and we got a red oscillator bar here for the first time since 2022, or since, so I want to just point out something to you. Remember, look at how when we got that red oscillator bar when we got the one in October of 2022, remember, MACD is a lagging indicator. So after the move starts to happen, then you start to see the oscillator bar and you start to see the MACD depict the move, but it's not a leading indicator. So the move already starts. It kind of confirms what you're seeing. But look, here it is right here. This is when it happens before. At the week that we got the first red oscillator bar, which was October of 2022. And it's funny, we're going into October now, but we're in September. It kept going down for a while. So look, hold on. So let me just highlight this one first. And so look, check this out though. Hold on. So when that move happened, it dropped for a while. So look, so from this month, like again, we're going to start from here. This was October, that week where we got that oscillator bar. This week, the week of October the 3rd, 2022. And from there, the stock dropped from 114.5, came all the way down to $81. That's a huge drop on Amazon. I mean, and we had a continuation. It dropped even more into December. We went all the way, well, I said to 81. So that's why I'm just saying 81, dropped all the way down. Now, again, not saying that that's going to be a repeat of this, but for several Septembers, the market dropped. So for the last 3 Septembers, we had the market drop, right? And then especially for the 3rd week and the final week of September, the market dropped. And then sometimes we got a little pivot in October before a continuation down. But just saying that this next week, even if we get a retest, or I call it a pump fake or whatever, I'm looking to add puts depending on what the price action shows us, because we got some now. I got some other stuff for y'all that I'm holding out on. But just one thing, Powell came out and he did what he had to do. Powell came out, and I told y'all they only send Powell out there. The Fed, Powell is the Federal Reserve chair, right? They only send Fed Chair Powell out there for one or two reasons: to take the market down or bring it up. They never send him out there for any other reason. He's like the omen for the stock market. He's coming to take life or give life, something. He's out there for a reason. Now he's coming back out on Thursday. So we got GDP Thursday morning. I'm not going into that yet. We're gonna get there, but we got Powell coming out. He's speaking at 2 p.m. on Thursday also. So I don't know what he's coming out to say, but I know the balance sheet comes out that day also. But yeah, so look, man, I don't know if he's going to reiterate what he said or clarify some things, but but we got Amazon right here holding on to a key level, a must hold area, because if it loses this area, we got a nice move down. A really nice move down, but if it bounce here, we got a nice move up, so it can move down. I say like a good few move. Hold on, I just want to go over to the daily for a second to show y'all this daily. We got a lot of broadening formations on a lot of these stocks right now. So look, Apple, I keep saying Apple, but are we talking about Amazon? Nice move down. So this could be a nice big move down to our 200 EMA. I'm not even looking at the SMA. I'm looking at just the 200 EMA. This is a nice $8 move down if we lose that area. Now look at this broadening formation right here. So we got a broadening formation right here on Amazon, and man, so we got a nice broadening formation here. Let me just get this out of here. So it has some room down. It has room down. And this market, again, a lot of these stocks, so Amazon, they just they're hiring a lot of people. It's a seasonal hiring that they're doing right now. But yeah, we got some room down, man. Like I said, I'm looking for at least the first level that I got right here is this 26 area right here, where we've tested it a few times. So if it comes down, we likely come down to this area here first. So what is that? 26, 25, 25, something like that. Come down to this area here. I can actually pull this out a little more. And yeah, that's actually a little bit more better. Yeah, so around that area, man, we come down there. And so we had a, what is that? A 222 continuation that we had here on Amazon. I mean, again, it could bounce here. We get a reversal, a 222 reversal possibly, and then try to fill this bearish gap or whatever. But I'm just looking at what the market is doing, and we got to let the market show us what it wants to do, man. So right now, Amazon is not looking good either. But again, it's another stock that was holding on, but it kind of lost that area on Friday. If you look, so it was holding, but it looked like it kind of lost the area to me. It looked like we got to move down on Amazon, but we will see. That's why, again, I didn't alert any trades on Friday heading into the close. I'm like, we can wait and see what happens Monday, yeah. Here's a inverse hammer on the quarterly candle on Amazon also. So just got a lot of interesting setups. It's like the market is in confluence right now to the downside. Tesla, big Tesla. All right, let's start here. Tesla, man, was a pretty bearish chart last week, and this kind of played out according to plan last week. Now, I got a lot of lines on this chart, man. I've been just trading the hell out of Tesla. But you see, man, and again, I'll look at the weekly to give us more on this. But yeah, man, so Tesla support is at 244. We lose 244, we come down to 240. So and so that's what I'm looking at right now, just seeing if we're gonna hold 244. We don't hold 244, we come down to 240. And I'll go into the weekly just so we can get a clear look at this, man. I hate these snap EMAs, man. I mean, these I got this magnet feature on here, so it kind of it's snapping in now. It's easier to see this on a higher time frame, but yeah, you see it kind of flush down. We had a crazy flush, and our 200 EMA is down here at 228. What is that? 228, like 229. Let's call it 229. We got that green oscillator bar on the daily. And so, yeah, we got our green oscillator bar. We got the MACD line crossing below the signal line on Tesla. Also, let's look at the weekly. Sheesh, crazy on the weekly for Tesla. So we got a 2-2 continuation on here. So, and yeah, this is an ugly chart, very ugly chart, man. So I think the first move that after I don't think is a question. And again, we got to be careful when we talk about Tesla, because I'm not even going to say that, man. I'm not even going to say that, because can't make this about anything other than stocks, but or the market. But yeah, we just got to be crazy when you trade in Tesla, because it can have a nice setup on it, and then some weird news will come out and just save the stock. Let's just say that, right? But hold on. So we got it. I think Tesla's coming down here at least to this gap first, man, before any recovery. But like I said, it got some strong support is at 244. That's where it's been holding. And even when in situations where the market flushed before, we've gotten some support down there at that area. But I think the situation is a little different this time. So I think Tesla wants this 238.59 price level or whatever. But again, that's going to take a little time to play out. But we have to, again, remember, one light at a time. And here, this is why I call this situation a little different than before. I'm going to show you. 1 second. Change this to a 50. Change this to a 50. All right. So the reason this is different than before it coming down here and getting saved at this level is because before it was holding the 50 EMA. So the 50 kind of lined up with this particular area before. And so it had a strong support at the 50. So even though it was hitting this level, a few of them times it hit this level, few times it didn't hit this level. It just straight bounced off the 50. So we got wicks down here, but we got closes above the 50 on all of these occasions. So you have to take that into consideration when looking at this particular level. So I don't look at this as a strong level anymore, because the 50 is up here. I think it loses this level and we come down to 238.5. But we'll see how it plays out, because they can come in and save it. But that was one of the weakest stocks on Friday. We had the strongest volume of the week on Friday, and it was all bearish. For the last 3 days, it's been bearish. So again, that's just something I'm taking into consideration. You have to, it's about confluence, man. And it's about, those clues and everything go together. You got to put it all together. And that's what I see there for Tesla. So again, I'm not really expecting for it to hold 244, but it may hold 244. We will see if it holds 244, and we will go from there. Let me just take a look at the quarterly for kicks on Tesla. Okay, not too bad. Now let me see what the monthly looks like. And okay, cool. Not too bad. But yeah, it's not too bad. Not yet, anyway. But yeah, Tesla got earnings coming up soon. Also, that's another stock that got earnings coming up, and we just got to keep an eye on it. Look at when you zoom out, man, things don't really look as bad, right? But at the end of the day, this is just the start. We're just getting started, man. A lot of these stocks have a lot of room to fall because of everything that's gone down. I'm always looking at wedges, man. I just saw a wedge. I want to see what it looks like. Interesting. Okay. Now let me find okay, cool. So let's see if we keep this trend intact. Yeah, this was from a few weeks ago when I drew these on here. Okay. All right. So yeah, this kind of plays out according to the plan then, because pretty much Tesla comes down here, loses this level. As long as it holds this area here, it maintains its uptrend or whatever. So it still has room. It has room down. So if we lose this area, it's not the end of the world. But for long-term investors of the stock, but I'm looking for obviously some trades, man, for us. And so I see some moves, man, that could potentially happen on this, man. It looked like we coming down some more on Tesla, and this kind of plays right out into that nice setup on the weekly for Tesla. And it kind of brings things into perspective a little more. We got room down to the 200 EMA too. Again, in the perfect world, it holds this structure here because it's been doing it every time. So look, if you just notice the last few times, we get a move down here, it's bounced or whatever. So, so we may come down here this week. We may not come down here this week, but I'm still looking at this as the target, since that's where, it fits into my plan, my overall plan. Let me go and hit Meta. Let me hit Meta. So this is Meta. This is the weekly on Meta, but I'm not ready for the weekly yet on Meta. I'm going right to the daily on this one. Meta is interesting, man. We had a Meta is interesting. All I know is if Meta finds a way above, and again, obviously the market is coming down, but what I've seen the last few times the market has flushed or whatever, Meta's been kind of defensive, and they've been holding it up for some reason. Well, I mean, one of the reasons it's defensive, everybody knows oversold and a few things, but we got a so we obviously had a 222 reversal here on the daily, but we got an inverse hammer. We got our 50 right here. I want to see something. Hold on. I just want to see where my other, now we lost this structure on the daily for a this uptrend that we had here, and we went back up and retested that Thursday. That was a nice put trade or whatever. And but yeah, so Meta has a few levels that it can actually retest and still be safe. So one key level right here we have is this 50 EMA for Meta right here. So this area right here that I have mapped out or whatever, which is at 296. I give Meta margin down to 295, but honestly, right now, we don't want to lose this area again. We lose 295. We lose that 295 area, then we'll have a nice move for Meta down to 288. That's my price target to the downside for Meta is 288. Then we also have a gap down here, a bearish gap right up in here that lines up with my, area. So it's kind of it lines up perfectly now. But what I was going to say initially, though, but if Meta holds this area, man, and what I need Meta to do, I need Meta to break through 310 and close over 310. We break and close over 310 and it's out of here, right? So let's just see how the market right now. I'm not looking for any real upside thing. Now, the thing about Meta, you can get a nice move off of Meta in the, during power hour if the market gives us a pump fake, because this is one thing that I want to say to the team on this meeting right now is, and obviously we'll get into it more, but just an important thing to keep in mind. If you look at the stock market as anything else. I always use the bank as an analogy, a bank robbery as an analogy. And again, of course, nobody on here is planning to rob a bank or whatever. But if you were casing to rob a bank or something like that, you wouldn't think I'm going to go into this bank and it's so much money in this vault, I'm just going to stay in here. No, you're going to case it. You're going to decide what you're going to do, and you're going to be in and out, right? So I always say in and out like a bank robbery. In the stock market, you got to have a plan. You got to stick to it. So, and I'm saying this for a reason, because we're in the market is in a crazy situation right now. And a lot of great moves happen in this market that we participate in, but a lot of times, you don't live in the moment. You don't live in the moment. They say, it's like, if you got to live in the moment, and that moment I'm taking this profit and I'm going, you can't just anticipate the possibility of it is going to have a continuation or keep going up. And I always say, one traffic light at a time. People say, well, what about this level? What about this level? I'll give you an example. On Friday with Apple, I had the team in an Apple play, and there were a few members asking about other levels and next targets and stuff like that. And I'm like, well, the thing is, let's absorb what we got going on first. And I don't say that to discourage anyone from making money or doing anything, right? But it's just about being practical or whatever. We got to have practical targets, and we got to be practical about where the stock can actually go. So I'm saying this because this all goes in and this all lines up perfectly. So right here, give you an example. So we got a 222 reversal on Apple on Friday. We got into calls on Friday while the market was falling off a cliff. Now this was Thursday, an inverse hammer on Thursday. So yeah, of course, some people would look at that and be like, well, why would you call out calls there? I mean, it was at a key level. It was a lot of flow going in there also that wasn't, I didn't have an answer for. And then one of my traders told me that the iPhone was coming out Friday. And again, iPhone isn't something that normally get stock moving. But I'm like, well, then they'll probably, it was just a lot of things that could possibly happen off of that. The main thing for me, it was at a key level and a lot of flow was going into it. So although we had an inverse hammer, that's just one chart pattern. That's just one candle pattern. Right. And so long story short, we got those calls for about $60 per option. They went up to over 258%. Right. But the issue was, if you up 200 and something percent on a trade, don't worry about where it could possibly go from there. Because I'm gonna tell you, this was my thing. I told the team my main price targets were here. Again, this is where hold on one second. This is where the stock closed. Let me get my pointer. So this is where the stock closed. The stock closed right here at the bottom of this I guess hammer, right? This candle, it closed down here, all the way down here. And let me just switch this back because I gotta see what that is. So yeah, so we had, that was what is that? 173.93. That's where the price closed at, right? So we got price closed there, and I called out the 175 call. So my goal, my thought process was taking the trade was, okay, we get a bounce. Those calls should at least go in the money because they're gonna want the fact that it was holding right here. I'm like, they're gonna want that bearish gap, that bearish gap fill. That's what that's gonna be the first thing they're gonna go for. And that's our first target, which would have put our calls in the money. So that's the 175. That's 175. 175.49 price level. So that was my first price target. And my second price target was the 9 EMA, which was at 176. It was 56 at first, but it moved a little bit. Those were my price targets. Really one price target is good enough, because that took our calls up over a few %, over 100% after it hit the first price target. But this is the second price target. You don't start thinking on a Lotto Friday, with no time left on those options where theta is starting to creep up. The longer you're holding it, the more your premium is burning off of that option, the longer you're holding it. So it's just like, just because you're holding it, you're losing money, and it's getting even worse as the day progresses. So if you get up here, you want to be taking your profit. And so that was my second price target. I wasn't worried about it going and holding above the 9 EMA, the 9-day EMA. So that's why, when asked where it was going afterwards, I did have other targets where it could possibly go. But the point was for the next target to be in play, price would have to stabilize and hold over this. And and honestly, there's no real way to know if price going to stabilize and hold over the 9-day EMA until the day is about to close. We got a straight head fake, jumped up here, got an inverse hammer. We got a double inverse hammer, finished just like that. So we got a double reject of the 9 EMA. After it lost it, we got a double reject of it, and it came back down to this area. So, but the whole point is you want to be taking that profit. If we already had targets in mind and you got this target, you scaling out of some of that trade after your first price target, and then the second one, you taking the rest of your position, you may be able to have a runner or something if you see some more momentum, and that but you wouldn't be able to see that from looking at the daily alone. You would have to unpack that daily chart and, do some surgery on those candles to see exactly what's going on in this particular candle. And the way to do that, for me personally, I'm checking out the session hourly to see what's going on at that time. And 1 second here. So if you look on the session hourly, man, it was just clear. No, this is SPY. The SPY, yeah, SPY was clear, man. SPY never really woke up. Let's see, man. Yeah, man. So here it is right here. So this is Friday right here. So this is around so at 9:30. So yeah, so Apple, and remember, if you were in this trade, I let the team know early in the morning. Obviously Meta was my first priority because that was one of my my biggest trades on Friday. But so it took a little while for Apple to take off, not too long, but I made sure when I saw Apple, the contract dropped down to $38 from $60 that we paid for it early Friday morning. I made sure I let the team know that Apple was accumulating, because that was a nice area to average down on it. Got a nice bounce, closed over the 9 EMA on the session hour and VWAP. Then we got a bounced off the 9 EMA VWAP for a continuation. Then the third candle came back down, retested VWAP, and finished as a hammer. That's it. Because this kind of correlates. This was in direct correlation with where the 9 EMA was on the daily, the 9-day EMA. You have to be practical. We came up here, price rejected the 9 EMA on that candle. Came back down, retested the 9 EMA on the session hour. Price came back up here, got rejected again. So okay, didn't get through that second time. Now, third time, came back down here, bounced off the 9. Now, look, each time this is happening, I'm buying, I'm replaying this position. I'm not even thinking about the possibility of price just going through and holding and just holding and hoping that it's going to really break through this daily level, right? I mean, do this 9 EMA and hold. I'm not necessarily thinking or believing that, but what I am doing is understanding where the range is, and I'm playing off that range. You can see here that once it finally broke through this area right here, it established support up here and it started holding that. So each time it retested, this was an area to buy, right? So that's just how, but that's deep. That's going into support and resistance, and that's not what this is about today. But yeah, man. So we got all of those stocks so that's just something that you want to take into consideration. And like I was saying, so since the fact that we got Powell speaking on Thursday, and GDP is Thursday, and then he's speaking that afternoon, then we got PCE data on Friday. So it's just a lot that we're going to have. It's going to be a lot of stuff going on. And then so we got Nike also earnings on Thursday as well. So that's another thing that has to be considered. Now, Nike they guided down after the last earnings miss, and it's been falling off a cliff ever since. Now, if this situation, this whole narrative that they got going on, I don't know what Powell's coming out, like I said, to speak about on Thursday. I just know that he's dropping the balance sheet right after he speaks or whatever. The balance sheet comes out, and so we will see. And then jobless claims is that morning. We got, man, it's just crazy. Yeah, so this is just going over the Apple real quick. I had to touch to Nike real quick. I had to touch Apple because it was just part of the conversation that we were having about now I am going to touch this because there was a conversation that we had a few weeks ago about this particular chart in general, and 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 uh and since then it dropped another $6 since then, right? So it's been heading down, and it may continue to fall into earnings right now. But like I said before, the fact that they've guided down, and analysts have re-rated the stock so much, it a lot of the move may end up being priced in when they get to earnings, when earnings actually come. Let me show you this weekly again. I already have a trend on there. Sorry, the monthly. Ugly chart, right? So look, so I mean, it has some room. It's been holding this uptrend for a while, but it has some room. So we still got more room for Nike. Like I said, my price target was 83. So that's why I was saying, I'm sorry. Yeah. So I was like, it could come down all the way down to 80. I'm like, so that's why, 83 was the next big price target that I had. So that's why I was saying them 85s were a good put option a few weeks ago. And then heading into earnings, we still got some more room down. Again, most of the move happened. Now, this is the key right here. If I think that whatever we're expecting Nike to say for earnings, all of the bad, I don't think it's going to be as bad as they thought it's going to be. And I think that they can actually end up beating on EPS or whatever, based off of everything that they did and all of the changes that have been made since the last earnings. So that's just something that needs to be taken into account or whatever. And just everybody need to be clear on. Now, look, here's this uptrend or whatever. Yeah, we moved or whatever. We had some moves, but it's been pretty much holding this area for years, right? It's been holding up for years. Now, obviously, we had COVID that happened. We had that COVID bounce right here, but you see what happened. Well, obviously, everything went up then because of QE, quantitative easing. But we came down here. This was another big drop that we had, and so ironically, we talked about this a few weeks ago too on Zoom. But look, this was September. We came down. We had a big flush in September. And this is October right here. This is October. This is the monthly. We came down because September was a volatile month. Now we're still in September right now. So we may get a bounce right there heading into, whatever. Like I was just telling y'all a little while ago when we covered SPY or whatever, where SPY could possibly go, and what typically happens in September. Well, for the last 3 Septembers we had for SPY, and then a continuation heading into this particular week right here. So it's a lot that is going on or whatever, but this could end up being a nice double bottom area. It correlates with the uptrend. Again, Nike got earnings. They could have a surprise because of the fact that it's been re-rated down so much. And it's been falling off a cliff because they've been dropping new data over and over again to kind of let us know what's going on. So I want to see our 200 is down here. So it still has some room down if the market was to continue to see a lot of pressure. So just something to keep an eye on or whatever. Now, the last thing I'm gonna cover, because we are over, I was going to kind of go over the economic data that we do have coming up for this week or whatever, because we have a lot coming up. Like I said, we got now that second, just make sure we have it here. Yeah, so we have on Tuesday we have the home price index that's going to come out at 9 a.m. Then we have consumer confidence Tuesday at 10 a.m. And then at 1:30 p.m. we got FOMC member Bowman speaking. Then we don't really have anything until Thursday, which is where GDP, very important, comes out. I can't believe it. Just seems like we just had GDP already. We got GDP Thursday at 8:30 a.m., followed by jobless claims. Well, that's good. They're going to release at the same time. We got jobless claims and initial jobless claims, probably some revisions or whatever that we have coming out also. And then on Thursday at 2 p.m., Fed Chair Powell speaks. So I don't know what he's speaking about. I have to do some more research on it or whatever. And then on Thursday at 2:30 p.m., the Federal Reserve balance sheet is being released. The bank's balance sheet will be released. And then on Friday at 9:30 a.m., we have PCE data. So we have a lot coming up this week, but right now the market is falling off a cliff. And like I said, Powell only comes out for one or two reasons: to take the market up or to take it down. And remember, when I went over the highlights from the FOMC meeting, one of the key things that was important that we covered was the fact that the Fed said that a November rate hike is on the table because they see stronger growth in the economy and higher inflation ahead. So we just need to keep that in mind. And we got the non-farm payroll data coming up real soon. And then we got CPI and, and the forecast coming up. That's on October 12th. So we got a lot of stuff that's coming up heading into this earnings season. So, and if you notice, again, when it was during that press conference, that's why it's important to kind of pay attention to what the Fed is saying, because once he made those comments, the market started to fall off a cliff. So it's a lot of uncertainty. Everybody's afraid. And speaking of everybody's afraid, let's see just real quick before we get off here, what the fear and greed index looks like right now. Let's see if it's extreme fear or not, or fear. Let's see. Okay. Second, let me just see. Are we at fear? Let me see. Yeah, so we are at fear right now. The fear and greed index is sitting at fear. So yeah, man. So I'm not sure. We have some. It's a lot of stuff to take in. And again, like all of those stocks that we covered this afternoon, and all of the key levels that I showed y'all, where a lot of them are sitting at. So it's going to be actually there was one last one that I just because we went over all of them, it has to be, I have to check it to see where that one is. And that is Microsoft. That was the last one that we didn't check. That's important. Okay. So Microsoft still finished inside, but it got flushed out badly. Yeah, that was because the day before was interesting. I like how it's interesting on this one though. Cool. So we still got a 222 reversal on Microsoft. This might be a really good one to play for some puts too when the market continues to come down, because it has a nice way down. We can probably get this one. We can probably flush this one all the way down to like 304, 305. My bad. We can probably flush this one all the way down to 305. Let me see what the monthly looks like. Yeah, that looks like interesting possible. So it's inside on the month right now, and inside on the day. But yeah, this is a interesting chart, man. Microsoft, man, I like how this look. Yeah, it has a lot of room where this could move, man. And there's not really much holding it at this point. It looked like it's headed towards this gap area. It bounced off the gap area right here, but definitely has more room down. We're going to keep an eye on this one, because it's a few stocks that move when SPY moves, and that are very sensitive to SPY. And Microsoft is probably one of the most sensitive stocks to SPY. So when you see SPY flushing or SPY running, you check out Microsoft, and that's just one of those stocks and that you want to check out, because hold on, since I've already changed that, let me just see, because I still see this big beautiful bull flag on here though, although it's everything breaking down. Still looking for bull flags. It's crazy. But for now again, but you got to still look at, man, just be realistic about what's going on in the market, and don't make your decisions based off of just shoot off of any just being biased or whatever. You want to kind of really just be realistic with what you're seeing, and see how they hold up with what's going on in with the market as a whole, because yeah, so and the support has been holding up for a while. So it's been holding this support since May or whatever. So let's see, we had one bounce off of here in August. Now we're down here again. Let's see how price moves. But yeah, man, these trends, man, they're cool and all. But at the end of the day, man, we really got to pay attention to just the overall flow of everything, not just one stock. I want to see where the 200 is for Microsoft. Is that my what? Yeah, I'm like, why is it that color? I must have changed it. Yeah, so this has some room down, and it kind of correlates with my area or whatever. I was saying 305, right? And so that's where our 200 EMA is. I didn't know that's where it was, but it just kind of correlates with the level. So that's what I'm looking at. Look like a nice area to play off of for Microsoft. So if the market, and again, like this ain't something that I'm looking at like to happen in a week. I mean, it could happen in a week. Look at this real quick. This is 1 week worth of price action right here. This is the weekly. One candle represents 1 week of price action. In 1 week, Microsoft went between the low was 315 and the high was 330. So that was like a $15, almost a $16 move on that stock. That's a crazy move. I'm looking at contracts for the October 20th expiry on Microsoft or whatever, if I'm looking to play anything on there. And again, like I told y'all what area I'm looking at, but the market has a way of playing itself out, man. And when you get a flush on the market like this, don't just assume that the market is going to come down because we got this flush, because again, the market moves in waves and pulses in waves. So you may get the market come down in a few days, you may get it going up, and then you get that real flush. Like I'll give you an example here. This is a weekly though, so this isn't going to depict it the way until I go to the daily. But look at this. So we got this breakdown off Microsoft. Then we got a few weeks of it going up. Then it flushes down. We got a crazy gap down on it, and we may get another one this week. You never know. But look at the daily. You get a few days where it stopped going up, or you get some choppy action, then you get a flush. So it's like you just don't really know what's going on. But I'm looking at, once it lost this non-EMA, it was bye-bye. It came back up and retested it a few times, but it never really made any noise after it lost it. So look here, when it lost it up here, we started rejecting it. So this is a nice indication. That's why I use it a lot. Came down here, bounced off the trend. We got a 222 reversal here with some strength. We closed candle confirmation over the non-EMA. Then price started to move. We got a little choppy. Something happened right here. We rejected my key area right here, came down here, got another close back over the non-EMA. Then price started to ride the non-EMA back up here for a while. And then once we lost it, it flushed down again. So, we got to see what the market is willing to do. But at the same time, you got to really follow what's going on, follow the price action, and let the market tell you what it's going to do, because every chart tells a story. But yeah, man, it looked like Microsoft wants to at least come down here. Look where we at right now. We closed at 319. What is that? We closed at 317. The bottom of this trend right here is at 314.5, but I don't think this trend is going to matter too much. Now, again, a trend, market structure is more important than just this trend line right here. But at the same time, if it loses this trend, like I said, my price target is 305. That's another $10 move down. I'm looking for some weeks out. But in between there, it's a lot of things that can happen. The market will fake you out, man. And just one last cautionary tale or measure real quick. SPY, man, just like everything that SPY did, man, with this beautiful like way this played out, man. It just did. Obviously don't look like it's going to play out like that at times. We got this broadening formation. We rejected the top of it. Then we rejected the top here. We got this double top right here, played out to perfection, right? But when the market, this is a daily chart, but look, also on the weekly though, there's just be so much going on in the market. For a while, we had this. Price was consolidating in we had this bull flag on the weekly, price consolidating up in this range. Once we got that, see, this is how markets play out though. Look, once we got this 222 reversal and that candle confirmation close outside of here, it flushed the next week. So you got to pay attention to this stuff, man, whether you want to or not. You got to pay attention to it, and the market tells you what it wants to do. But yeah, I'm looking forward to a very volatile week with those economic events coming up with Powell. Now, it's something to keep an eye on. So like if some people don't like playing the downside on the market, people don't like when the market is coming down and stuff like that. So there are things you can do when the market is coming down. Now, for example, we got the VIX. The VIX is our volatility index. It measures the fear in the market. And right now on the weekly, look at this. I'm going to go to the daily for a second first. This is our VIX right here. And it's right here at its 200 EMA. Look, and look how long the VIX been below the 200 EMA. Look, the VIX ain't seen above the 200 EMA, close above, or like been above this 200 EMA on a closing situation since what's this? Damn, since March of this year. We've got some spikes above it, right? But since it lost it on March 21st, it's been rejecting it. So we haven't been able to get anything above the 200. This did play out though. We got that breakout, but look, we still below the 200 EMA. And right here, look at this. Look at the way this closed on Friday. We got that we got a 2-2 continuation off of the non-EMA, and then we closed with a hammer. But right here, we could not infiltrate this 200 EMA, right? We got we got MACD line crossing above the signal line. We got 3 green oscillator bars here. And so if the VIX breaks out, if this VIX breaks out and we get a candle close above this, then we'll likely go to 21. Now, we don't want the VIX going up no more, right? We don't want the VIX going up. The last time the VIX saw those types of spikes, again, we saw some early in the year, but look, I'm gonna show you September of last year. September of last year, we was all the way back up to 30 something. So this is where it gets tricky. This is the third week, though the final week heading into September, you know, when the VIX start to get tricky. So we got to pay attention to what's going on with the market is telling us. And so I like to trade the VIX. You know, you can trade the VIX. We've traded it several times here, but to me, it's just an indicator. I like it. I like to watch it, monitor the fear gauge. And so we need to break this 200 EMA on the VIX. So some people like to trade stuff like that. Another thing that you can trade, that you can do, you can trade energy, and you can trade consumer staples. Consumer staples are the defensive stocks like Walmart and Home Depot, all of those types of stocks that well, not necessarily Home Depot, but I say Walmart. The reason I say Walmart is because Walmart is one of them stocks that you're going to buy regardless of whether it's a recession, whether it's a war, pandemic, anything. You're going to go to Walmart. You're going to buy some Colgate. You're going to do all of that. So these stocks are defensive. So, and if you don't want to choose one stock, you can play XLP, which is the ETF that tracks that particular sector. Now, right now, this sector is down and is dying. But when people start taking their money out of big tech because they're afraid that the market is going to die, they rotate it into consumer staples, and because they're defensive and they go up. So right now they're going down, and the whole sector is going down right now. But let's just look at Walmart individually. Walmart looks fine. You know, Walmart is this is Walmart on the daily. Walmart is okay. Walmart is obviously inside on the it finished green on Friday. Crazy enough, it finished inside in green with an inverse hammer, but it finished inside in green. The overall sector, now it's a lot of stocks in that sector, even stocks like Target. So you know, all of them aren't red, all of them aren't green. But this is Walmart on a weekly 222 reversal. So you know, again, like I said, just pay attention to some of these stocks when the markets start to flush. Right now, we're not in that situation. Now, XLE is another ETF that we watch a lot that tracks the energy stocks. That's another thing that you're going to buy regardless, because you're going to need energy regardless of what the market is doing. It kind of looks like XLP a little bit because, it's obviously everything is red right now, but when the dust starts to settle and when they start to rotate in out of big tech and get defensive, then they're going to come here. Now, I know I said this before, but just one final thing. We got a lot of, banks earnings are coming up really soon. Next week, in 2 weeks, we got the start of earnings season. And so XLF is another ETF that you can watch to track the banks. I was telling the team to watch Bank of America on Friday. I think it was Thursday or Friday. Yeah, Thursday, I believe, or Friday. This was Bank of America on Friday. This is why I told the team to watch it. Key level alert right here. We came down here and we're at a key level. So if it's going to hold this level or is it going to lose it? If it loses this level, we got a big move down for Bank of America, but it could bounce right here heading into earnings season. But the banks, again, and this is another reason why we got to pay attention to it. The Federal Reserve balance sheet, and then I don't know what the Fed is going to talk about on Thursday, but they're coming out here. But look at this level. Look at this. Now we came back up here. This is the weekly chart. It's been plenty of times where we've lost that level where and we've come back and we've held it. But ever since we've been above this level, which was May 2023, and this was after, remember, the whole bank run situation happened. This was March when the bank run situation happened, came down here, bounced. So this is where I'm thinking that we're going to fall to if we lose it back down here to 26, right? That'd be a nice flush down here. And there's nothing really stopping it from going further. But look, so here we go. And you notice that was when we got our first red oscillator bar again. Now we got one right here. So it could lose it. But look, check this out. Ever since we got back above here, it's been holding this area. We've came back and we've retested it a few times, but we had no real pressure on the banks yet again. So since March, April. So now we're here and they found a way to hold this area with extreme selling on the market on Friday. So they held up pretty well. Here's another depiction of this particular area right here. So let's see what they do with it, man, because again, that'll be a nice move down. I'm just curious since we're looking at that to see, just curious. Yeah, so Citibank looks just like Bank of America. Figured it would. Yeah, Citibank holding up a little better than Bank of America. And but yeah, that's the one. I just happened to see that particular chart. And now JP Morgan, similar setup. So JP Morgan right here, another key level right here that it bounced off of on Friday. We played this one heading into last earnings and a few weeks after earnings. I like to play JP Morgan heading into earnings or after earnings because it's a nice stock. It actually moves pretty well and the contracts pay. So, it's just something to keep an eye on. This is another area right here that it's been they came in and they've saved it at, and it bounced right here on Friday. Let's see how it looks on the weekly. Yeah, so it bounced off this area on Friday. Let's see what the banks does. What this does, but yeah, this is something else to keep an eye on. And so I don't like we play XLF sometimes, but I prefer to play that the week 1 or 2 weeks before earnings. And this week would be 2 weeks before earnings because earnings season starts in 2 weeks. So just something to keep an eye on, because think about it. This is what you got to think about. When these stocks start flushing like this, right? Everybody gets afraid. Everybody becomes afraid and everything becomes oversold. They got earnings on JP Morgan got earnings on the 13th of next month, and here's Goldman Sachs, also coming back down to this key level. We played it the last time it came down here to this area, and we made a lot of money off of it. So just something to keep an eye on. A few of these stocks look great heading into earnings, and it's just something that you just want to be keeping an eye on. But just think about it. Every time it's come down in this area, sometimes it drops, but on the times where it didn't, or so that's why you don't have to rush and get into these plays. You wait until you get a confirmation. It's not like the stock, unless it's just gonna, it's gonna gap up or gap down or something like that. But you don't need the whole move. Sometimes it's worth just taking the chance and just not taking that chance and waiting for the next day. Like I didn't call out any swings on Friday. That doesn't mean I didn't get into anything, right? But I wasn't gonna call out anything, because I know what I think the market is possibly going to do, but we could still open up a certain way. And everybody don't know how to read price action or analyze charts or read charts or whatever. So if a stock opens up down a little bit, but it's still holding strongly holding over support, and flow starts to come in there, some people just automatically sell and take a loss, versus understanding what the market is telling you and it's about to go. Sometimes you gotta, so it's better to, so sometimes you just just don't even you don't have to take every swing. Also, you just wait. Sometimes just wait for it to hit to your level and make sure you get that confirmation. But yeah, I like it down here. This is again Goldman Sachs, as we played it last quarter and we made a lot of money off Goldman Sachs. This was a big one. So get it down here to 324.40, and see if it holds this area down here, and that'd be a nice move to play this off of. But yeah, man, I know I kept y'all over, and we stayed on here a little longer than expected, but it was a lot to cover, man. And I'm looking forward to this upcoming week, man. I will post all of the stuff that we covered in the chat, and I will see y'all later. Let me know if y'all got any questions in the chat. Cheers.
Cheers.
Thank you.
Thanks for all your time.
No problem. Peace.